This is the second half of Chapter 6, How to Calculate the Total Cost of a Loan. So this is a simple interest formula. It does not include the formula. It's going to be slightly higher than your actual costs and payments because it doesn't account for when you reduce your interest payments as you repay. So you take three things, three variables: the amount of the loan, the annual percentage rate, and how long you're going to um, take to pay it off. So if you buy a car for $10,000 at 10% and you're going to pay it off in 5 years, then your interest would be 10,000 times 10% times 5, which is $5,000. You would add that to your principal or the amount of the loan, and that $15,000 you would then divide by how many months you plan to take to pay it off. They use 60, which is a good example. Anything more than 60, if you use 72, for instance, to pay it off, you're probably going to run the risk of having to make repairs on a vehicle at the same time that you're still making a payment. So you want to try to avoid that. The Truth in Lending Act we should all know about before we go into a dealership. This requires the lender to inform the borrower of the amount financed, the charges that are included, the total finance charge in dollars, the APR or annual percentage rate, your payment schedule, your total amount of payments, your total sales price, if there's a prepayment or late payment penalty on the loan, security interest, and insurance charges. And all of that is something that you sign if you're in a dealership, and you borrow the money from that, or they find the financing for you, then you'll pay for it before you leave that dealership, or you'll sign something that tells you all of these things. But be sure that you know your rights before you purchase a car. You want to consider the auto insurance because some auto insurance costs more than others depending on the type of car that you have. So you definitely want to consider that before you buy the car. The different types of auto insurance coverage, though, are liability, which everyone has to have. That's a bodily injury, and also your property damage coverage. Collision, which pays for the physical damage to your car, and it's usually limited by deductible. Comprehensive pays for damage caused by vandalism, hailstorms, floods, theft, and other things. Medical covers medical payments for a driver and passengers that are injured. The uninsured motorist reimburses you for bodily injury and accidents caused by uninsured drivers. You can also get towing and labor insurance as well as rental reimbursement if you have to rent a car while yours is being repaired. Insurance rates are set by personal characteristics, as you probably are very well aware of. For a male, for instance, it's very expensive compared to a female of the same age. So it does consider your age and your sex and your marital status. It's going to be a little lower if you're married. Personal habits, do you smoke, that kind of thing, type and frequency of the vehicle that you're using, your geographic location. It usually is a little bit lower in rural areas because there aren't as many wrecks as in bigger cities, but it does depend on the data for the number of wrecks in your area. Your driving record is very important, whether you've gotten tickets or if you've had wrecks and the amount of damage that you've had. Probably if you do have one accident, if there's not a whole lot of damage, your rates may not go up. But if you back into a Mercedes and it costs a lot to repair that Mercedes, you may see that your insurance goes up. And the number of years that you've been insured with that company helps as well. Vehicle characteristics, the damage, repair, and theft record, and it does go down with the age of the car because they don't insure it for as much if they have to replace it in the case of a total.